Boom! Here's a fun one and a question I get every week from my northern buyers. Marco, what are the tax implications of buying real estate in Florida from Canada? Hi, I'm Marco Terminesi, Florida's Canadian real estate agent, and my passion is helping fellow Canadians like you find the vacation home of your dreams in Florida without any stress at all. Let's go back to the 80s. The good old days. Neon clothes, fluffy hair, Tetris, Madonna, Kiss, Super Mario Brothers, real hockey, and of course, real estate laws. Who can forget the Foreign Investment in Real Property Tax of 1980, also known as FIRPTA, right? Oh, the good old days. Hey, I'm allowed to talk about that era. I was born in '84. But seriously, most of my clients have never heard of FIRPTA, but I talk about this really early in the buying process because it's very important to know and understand, but nothing to be scared of. The selling of a U.S. property by a foreign person, which would include you as a Canadian, is subject to the Foreign Investment in Real Property Tax Act of 1980, income tax withholding. FIRPTA authorized the United States to tax foreign persons on selling any U.S. property. So what does this mean when you are buying a property? How much gets withheld? Who is responsible? How will I know what to do? These are great questions. The amount of FIRPTA withholding depends on a variety of factors, as exemptions and reductions in the percentage can apply. The purpose of the law was to try to ensure that foreign persons, not U.S. citizens, would pay United States income tax on any gains they made from selling real estate in the United States. In order to increase the likelihood of required tax being paid, the law imposed an obligation on the buyer in any real estate transaction to determine if the seller is a foreign person, and if so, to make sure at the time of closing, 15% of the gross sales amount was withheld from the seller and remitted to the IRS as a deposit against any taxes which might be owed on a gain from the sale. I will explain later on how you can get that withholding back. So in layman's terms, if you are Canadian purchasing a property in Florida, you need to first know if the owner of the property you are buying from is foreign or if they are a primary resident, like a U.S. citizen. If the owner is American, then no withholdings will be taken and FIRPTA does not apply at purchase. If the owner is foreign, then the buyer, you, are responsible to ensure that the owner will deduct and withhold a tax on the total amount realized by the disposition, which is generally 15%, or else it could fall back on you as a buyer. Whoa, this sounds complicated, but really, it isn't. Because here in Florida, we have the title companies that handle property closings and all these exact details. And these title companies will notify us on either direction that has to be taken to ensure that this is handled the correct legal way. This is why it's important to have a great team here in Florida. And of course, this is where I come in. This law applies the exact same way when you are selling a property. Well, we hope you never sell your vacation home here in Florida, but if you do sell, you will likely need to hold back 15% to the IRS unless your property is granted an exemption. How can I get exempt from this tax? No withholding is required if you sell your property for $300,000 or less and the buyer who is purchasing your property is a primary resident. Super cool, right? And I've helped many of my foreign sellers meet this exemption during their sale. Also, if FIRPTA withholding exceeds the maximum tax liability realized on the sale of the real property, sellers can appeal to the IRS for a lower withholding amount. For example, if the sale of your property results in a loss to the non-resident individual, FIRPTA can be avoided altogether. Another useful fact is that a foreign corporation that distributes a U.S. real property interest must withhold a tax equal to 21% of the gain it recognizes on the distribution to its shareholders. In layman's terms, if you purchase here in Florida under a corporation, you can be subject to 21% withholding at the time of your sale. So this is always good to know before you buy, so you can choose the proper way to take the title of your property. Okay, now you're asking, if I sell my property in Florida and get withheld my 15% FIRPTA income tax, can I get that money back? The answer is yes. You can get it back, and mostly all my clients have received all or most of it back. Your accountant will guide you through a simple procedure on how to get your money back. fill out the necessary forms, and apply. Remember, the IRS does not return any amount back until and unless the foreigners, you, apply for it. I'll include some helpful links in the description of this video. To learn more about FIRPTA, including whether the law applies to your transaction, visit www.irs.gov and type FIRPTA into the search field. Remember, I am your licensed real estate professional here in Florida, but not your licensed attorney. So for more detailed information, I can guide you to a true real estate local attorney or tax specialist for any additional clarification. Again, all the links will be in the description below. And there's nothing to be afraid of. I've been doing this for the last 10 years, and with a great realtor like me, and a great title company like the one I work with, we will handle all of this for you in full. If you made it this far in the video, firstly, congratulations. I know how exciting it's been talking about the 80s, taxes, and FIRPTA. If you have more questions, please leave a comment below and I'll personally respond. If you thought this video provided useful and helpful information, please slap that like button, subscribe to my channel, and don't forget to hit that little bell icon so you can get notified every time I launch a new video. Make it a great day, and I look forward to seeing you down here soon. Super Mario Brothers, real hockey, and of course, real estate laws. Oh, also, who can forget the foreign investment in real... No withholding is required. I love taxes. Taxes are so nice. The selling of a U.S. property by a foreign Persian. This law applies the exact same way when you are selling a property. Well, we hope you never sell your big... All right, that's a good one actually, man. That's a good blooper. If you do sell, you better call me. I'll be really upset. You want me to cry? How can I get exempt from this tax? How... I actually like them. All right, I'm gonna hit it with the I like this thing too. All right, don't look at me when I do it.
For a really long time.
I gotta hit this, man. I have to.